Welcome to Land Investing Online. Come unlock your potential freedom through land investing. Here at Land Investing Online, we teach students how to profitably buy and sell vacant land. This is the simplest, least competitive, and most profitable sector of real estate. To learn more, visit landinvestingonline.com. We have a free Discord with tons of successful investors. Come learn from the best. As always, guys, please subscribe and like this YouTube channel, podcast, Apple Podcast, whatever you're listening on. It really moves this business forward. It means the world to Ron and I. As always, I'm Daniel Apke, joined again by my brother and business partner, Ron Apke. Welcome, Ron.
Hey, Dan. Good to be here.
Today, we're going to talk about how to make money in a recession. But before we do that, let's get into a question from one of our members. The question is, I want to get started, but I'm not ready to take the leap yet to buy a course. What are some other ways to learn about the business, and what would you suggest doing?
Yeah, if you're here watching, you did one of the things for education. Don't get me wrong, it's difficult without like a step-to-step education program, but I also understand and respect the fact that not everyone can spend whatever $1,000 on an education program at the moment. But watch the YouTube videos, be involved in Discord. There is so much knowledge going back and forth on Discord. You're going to have to figure some things out yourself. No one's going to lay out the map 100% on Discord or anything like that. But you can pick and choose little tidbits that people provide on Discord. Obviously, we talk every day on podcasts and stuff like that. But be involved in the community. That's probably the biggest advice, Dan.
Yeah, and that's a free way to get started, the Discord community. And it's been really cool to see all of the different investors in there going back and forth on different topics. Some really high-level investors in there, deal funders. I mean, just get in there and network. That's really all it is. That's one easy and free way to get started, save up your money, then buy a course and get to know more about the business. But let's get into the show. How to make money in a recession. Hot topic, obviously. I read Wall Street Journal every morning and some other, real estate related, and just market related news. And I like to get, a little bit from each source, but everyone sees it. A recession's going on. A recession's coming. Whether we're in one now or not, that's debatable. But it's a hot topic. Everyone, I think every week we've had our live Wednesday night calls. You guys can also join those. If you're new and looking to get involved, we have Wednesday night calls at 6 p.m. Eastern time. But I think almost every week someone asks a question on something about the market. How is this business going to be affected in the market? What's going on in the market? People are just a little bit timid right now because of those news headlines, even though it really hasn't affected the consumer major amount yet. But generally, let's just get started with a really general statement. Recessions typically rise as demand lowers, just with everything, right? So one of the Wall Street Journal articles today talked about Target and Walmart inventory levels are at a few-year high, and inventory is going down because people are spending less money on certain things, right? There's no more stimulus checks to bump it up. People are spending a lot less money. Demand is extremely unpredictable right now. So, and that goes with the housing market too. Inventory is still very low right now in the housing market, but as rates rise and people start collecting their change and keeping it and keeping cash, the inventory is going to start rising on that level as well. So that's just a really generic statement that inventory rises, demand lowers, people need more money, people spend less money, and unemployment goes up. What do you have to add to that, Ron?
Yeah, I mean, at the end of the day, like during recessions, people have less money to spend. A big cause of that right now is rising rent, just rising prices of everything. And we talked about it a couple months ago on a podcast, Dan. Not saying we predicted, I think we kind of saw this coming, but as inflation rises, as rents increase, like people have less money to spend.
Right.
Wages are not increasing at the same rate as everything else, which is what the issue where these consumers do not have money to spend. I see it coming with I've talked to some car salesmen because I'm in the market for buying a car right now. And I just feel like they feel more desperate than like where they had all the leverage 2 months ago when everyone was looking for a car and everyone would pay whatever for a car. It's happening slowly, I think, but people have less money now. So I think the consumer is really starting to realize it. Where a couple months ago, like maybe an extra $50 a month on gas or something like that isn't adding up a crazy amount. but now we're double gas prices from a year ago, or I think it's about double from a year ago, or just close to it. Like national average is at $5 right now. Um, and it's everything. It's meat. It's all these things. Like you said, there's some more availability now because people aren't spending as much money. But yeah, I think that's a basis stand. People have less money to spend, which is in turn kind of fueling the recession.
Yeah, and on top of that, one other thing I brought up in the call yesterday, the live call at 6 p.m. Eastern time every Wednesday, is in April, the Wall Street Journal reported commercial properties fell for the first time in I think 40, I don't remember. It was multiple years though. And it fell. They were such a rapid rise, and it's still up from a year ago, obviously, but it fell 16% just in April. And that's kind of a first, that's showing that that's not showing that consumers have taken it, but that's showing investors are taking a step back. So by looking at the commercial trends, that's usually ahead of the forecast typically, and then the consumer comes after. So just seeing commercial, retail, all that stuff, all the retail spaces, industrial buildings, all of that be affected by it, is kind of a first sign that things are moving that way. And if you're watching this, you probably already know all this stuff we're saying, or generally that the market's dropping. But let's get more into it then. Let's talk about specifics with land investing changes, because a lot of what we do is land investing. We have rental businesses as well, but primarily our course, Land Investing Online, teaches people how to, like I said in the intro, buy and sell vacant land for some really good profits. And that's how we make money, and that's how our members make money. So let's talk about that, Ron. How is this going to affect the land investing business?
Like I talked about on the call last night, if you guys aren't joining those calls, please join them. They're extremely valuable. They're Wednesdays. You should get invites in your email. Wednesdays at 6 p.m. Eastern. But I'm excited for it in terms of land investing. Like I think like we talked about, people need money right now. Like people do not have as much disposable income if they have any at all. Like some people are working in a negative, like they have more expenses than they do money coming in, which is a huge issue. That's when foreclosures are going to happen. That's when all that stuff. People are going to need some money. So my goal as a land investor, as someone who's doing this, I'm going to provide, as we always do, provide exceptional service to these sellers. And I'm going to hold to my word. I'm going to be transparent with my word. I'm going to get them their money. And that service and the ability to get them money for their land in 2 or 3 weeks or whatever it is extremely valuable to them. So maybe I'm too optimistic, Dan, but I'm excited for the opportunity to acquire more land, even if things hold a little more on the market, which I'm expecting, because there's a few less buyers. Like we can sell a little cheaper, but we're going to buy a whole lot cheaper in my mind.
A whole lot cheaper and a whole lot more. I mean, think of there's a ton of members and different people in like the Tennessee market, I've noticed, and it's an extremely hot market. Everyone knows it's a hot market, but people are competing to buy there. Who has the highest price? Close it fast, sell it very quick. When that starts to cool down a little bit, there's going to be less people competing in the market. It really just trickles down. There's going to be more sellers, and one thing to keep in mind why there's going to be more sellers is this land isn't their home. People need a roof. People need a warmth. Think of everything you need to live, right? That's a home. They're harder to buy because people need their homes, right? That's where they live. But land is not a necessity to survive, right? It's extra. They inherited it, they bought it, they're paying taxes on it, whatever. So they don't live there. So it's not necessary for living. So when people start to lose their jobs and people start to spend more on gas, like what's going on, and have less money and need to pay their bills and all that stuff, they look at things they don't need, what are not necessities. Land is not a necessity. They can liquidate that and they can pay their bills, taxes. A lot of you, I think in recessions, you'll see and we do always, but a bigger spike in recessions with buying near tax time for property taxes, because those people need to pay. They don't have $3,000 or whatever they're paying annually. It's pretty cheap on a lot of land, but depending where, but they don't just have spare money sitting around anymore. There's no stimulus checks of 1,400 that they can just pay their taxes with. So they can liquidate before taxes are due, get quick cash, and provide for their families for food and shelter, the necessities I just talked about.
Yeah, I 100% agree. Like it's gonna happen. Like and everyone always asks, like, is this business model sustainable or is it gonna last a long time? like there are going to be way more sellers. People that I mailed 6 months ago who yelled at me or said my price is way too low are going to be sellers now.
Yep.
And that's just the truth. Like they're not going to be at, maybe they tried to sell their land and they can't. Maybe they just need the fast money because they have bills coming up. Like that's the reality of the situation that we're in. Like people just don't have the money to, they just don't have the money. They are going to need to liquidate things that aren't necessities, like Daniel said. Not everyone. Obviously, a lot of people are going to be able to hold their land through the recession and not have to sell, or maybe they'll find a really good realtor to sell it for them. But there are going to be a lot of people who are trying to get rid of this. Maybe people inherited it, which is a very common person that we buy from, but maybe they just wanted to keep the land long term. It's family land, but now they're like, I inherited this. I'm paying property taxes. I don't do anything with it. Now I'm a seller. Now this offer looks a little more intriguing. So let's talk about the maybe you have it on there. I'm sure you have it on there, Dan. Let's talk about the sell side a little bit, and what we're going to see in that, what we're already seeing in that, as far as being able to sell our land that we're buying. We're talking about being able to buy land easily, but it doesn't matter if we can't sell it.
Right. And you really, really have to market this land correctly. Marketing becomes even more, it's always important and it always moves your property quicker, but it becomes even more important in downfall markets because one thing you have to think about is views. Like how many views is your property getting? If you're just listening on one or two sources and you still with me, Ron?
Yeah, your mic's just cutting out a little bit. You're fine. Go ahead.
Oh, okay. Sorry about that, guys. Yeah. So the views you get is really important because if you have 500 views versus 100, it's just more touch points. And we always talk about that when we're listing on Facebook. And a lot of the views are crap views, but it's a percentage game. 2, 3, 4, 5% of those people are actually interested. Whatever that, I don't know the numbers. I'm just throwing something out there. But you have to get it out there, and you have to get people seeing the property. And that's what we talk about in terms of like sustainability. I have one company that comes to mind who markets their land incredibly on TikTok, on YouTube, and in markets like we've been in. I always like thought to myself, that's such a waste of time. And maybe it was the last 12, 18 months, but when that market goes down and they're getting 25,000 YouTube views and all those YouTubers are sharing it with their friends and family. And like I had someone send me a TikTok this morning of a tiny home that you can put on a property. Like those views in down markets are even more important because it's harder to sell properties.
Yeah, I 100% agree. And taking a little different approach, Dan. I've had multiple people, and I don't answer the phones much, but if our salesperson is on the phone, like I'll answer. And I've had multiple. I mean, I've might have answered 5 phone calls from buyers in the last week. Our salesperson has probably taken the other 50 or so. But I've had multiple buyers tell me they are looking to buy and hold land because it's a spot for them to put their money, and the taxes, the cost to hold is so cheap. So whatever, they have $50,000 cash. One of them told me they just want to hold it for like 5 years. Then maybe they'll build on it. Maybe they'll just sell it. But you have $50,000 cash. It's somewhere to put. It might cost $300 a year to hold. In 5 years, it's going to be worth $80,000 or $90,000. And right now, there's just not anywhere else to put your money. Like I do think we're going to see more buyers like that. Not everyone is savvy enough, I think, with land and understanding that to see how good of a spot it is, with such low property taxes and the value increasing so much. I think the land value is going to go up, Dan, right after all this is over. It's going to go up significantly again, and we'll see a big spike because there's only so much land available. There is a limited amount. Um, and as cities are being built farther and farther, or as subdivisions are being built farther and farther away from main cities, like it's just going to become more common, people buying land, people seeing the value in land. So I think it's a great place for you to put your money and hold for 5 years, honestly.
Yeah, you have me thinking honestly, because I have it on my goal of 2022. We're in. I have it on my goal sheet to buy and hold land for myself, and I never thought of it. Like I put that on my goal sheet because I personally never thought of that for an investment aspect. And that's why it was hard for me to do because I like to look at like my purchases, especially bigger purchases like that as some sort of investment. I was always looking like, okay, maybe take a loss, go hunting on it, whatever, spend the money. But now that, I'm refinancing some houses and we have extra capital with land right now, and I'm thinking about it, I'm like, huh. I mean, even if it's 5 to 10% annually increasing, and like Ron said, the taxes are so low, you do it in a good area that you know is going to increase, and you buy it cheap during a recession like right now, good, definitely good upside. But I do want to touch on rental properties and physical properties and what this means, because a lot of our viewers, yes, they're in land, but a lot are in real estate. Some do both. So let's talk about rental properties. So the first thing that you are going to want to know, or you already know, there's not going to be any more bidding wars. I mean, on certain properties in certain markets, there are. I'm talking across the board, right? If you're down in Phoenix, Arizona, you're still probably going to have bidding wars for underpriced properties. It's just a fact. But in general, there's not going to be as many bidding wars. There's no long lines to get a house, right? It's not going to be the most stressful thing you've ever dealt with. So you're going to be able to get things discounted, which is amazing, because in such a hot market that we've been in, it was virtually impossible to get things discounted. I mean, Ron and I, we did get some good properties actually, but they were through like alternative methods, not buying anything on the MLS. And if we did, it was Section 8 properties, so they just were not as hot. But some of the downfalls you'll see, so you will be able to buy under market value in these markets, but once it trickles to the consumer, which it hasn't done that yet. So right now, this doesn't apply to right now, Ron. I just want to make that clear. This is
Mhm.
upcoming. We're talking about recessions. We're at the beginning. It hasn't trickled to the consumer. So you're not going to be able to get things very discounted yet. But some downfalls with that is there's generally more risk involved to buy properties in down markets, because if you're buying, like I said, a commercial space or a commercial lease, there's going to be less people wanting to lease that place from you. If you're buying an apartment, yeah, you're going to be able to get people in that apartment easily still, but forfeiting on payments, people are going to not be paying their bills. People are going to be losing their jobs. Evictions generally go up in down markets as well. So there are some downfalls of it, but the price versus reward is very good. It's very, very good, because you're going to buy, say you buy 70% of market value and you buy $100,000 house, you're buying into $30,000 of equity right off the bat. So if you can sustain your cash flow and be positive, even with 70% vacant, 70% occupancy and 30% vacancy, some crazy numbers like that, and you're still safe, you'll see very, very good returns.
Yeah, I agree. And I do think like it is. You got to be careful with what you're buying. You got to make sure it's leasable or rentable. If it's apartments should be fine. Yeah, there's gonna be more evictions, but if you are buying a commercial space or something like that, you definitely want to make sure that you can get a tenant in there, or there's already a tenant with a long term contract. And that's what I'm going to be looking for personally. Like I want a commercial space that's going to be a good help me with tax benefits, with depreciation, and hopefully there's a good long term tenant in there. Um, and it's just gonna be less competition, like Daniel talked about. There's gonna be less competition for those spots. There's less people with money, that I keep saying over and over. There's less people with money. There's less investors with money. There's more people fearful. Like fear drives a big thing. Everyone says like it's so easy in a good market or an increasing market. Like once the market goes down, I'm gonna buy. Then the market starts going down, and they realize everything else. They have less money personally. Then they're scared to buy. Um, and that's when you can make a lot of money. Like if you don't let that fear drive you, and you let data and stuff like that drive you, you can make a ton of money in these markets, because you're going to, like Daniel said, competition's a huge thing. Lack of competition over these next 18 to 24 months, I think it's going to decrease tenfold. Like it's going to significantly decrease. Everything is going over asking market. I sold my house on Facebook in 2 hours. It closed 2 days ago. I'm happy I don't have to list the property right now, honestly. But that competition aspect is really going to change over these next 18 months in my mind, Dan.
Yeah, and I told someone the other day and it stood out, and I don't know if there's any truth behind it or not, but I was like, wait about 6 months to look for your property and see what happens. And then the other guy was an investor, and then he's paused. He goes, wait 6 months, and then when you get to that 6 months, wait another 6 months, because these things don't go away overnight. So when you think it's almost over or in 6 months, it's probably just starting and trickling to the consumer. These things last 12 to 24 months. Wait another 6 months is what he said after that. So he's just saying be patient. Don't rush things, because things are changing right now. But it's a really, really good time to become an investor. Bottom of the line is, if you're not an investor right now with real estate or land investing, you want to get involved in something. There's going to be a ton and ton of opportunities, and a lot of billionaires are made during recessions because of these deep, deep, deep discounts they get. People don't make moves
Yep.
in hot markets a lot of times. These big time investors make moves where they can get things for 50% of what they're worth.
Yep. Especially as you get bigger with the properties, like these people who have syndications or something to buy or $50 million properties and $100 million properties. Like there are only so many people that can do that. And these people, they're drooling. I know they are, because they know whatever, if they get it for 50 million, it's probably actually worth 70, 75 million. And then in 5 years, it's going to be worth 100 million. But I think that's so important. I'm excited. I think we're positioned well in land. I like the asset class that we're in. But also, I just think we have positioned ourselves well. Try to minimize your daily expenses and invest. Whether it's putting into any market, really, like it, once it bottoms out, it's going to go up at some point. I love land, and that's what I'm going to push you guys to do. But minimize your daily spending, I think, Dan, is important.
Yeah, that's all I have. Any last comments?
No, I think that was really good. Hopefully that helps you guys.
Awesome. Well, thank you guys so much for joining. To get started and to unlock that potential freedom that Ron and I are preaching, visit landinvestingonline.com. Join our free Discord where Ron and I are involved. Don't forget those Wednesday meetings we kept bringing up. They're Wednesday, 6 p.m. Eastern time. Sign up on our email list. Click the Start Here page. You'll get an email before to get invited to it. Please like and subscribe our YouTube channel, Apple Podcast, Spotify, whatever you guys are listening on. It means a ton to us. Other than that, guys, we'll see you all next episode. Thanks for joining.
All right. Thanks, guys.